that, which names do you see may not live up to some of the high expectations out there? I'm thinking of Nvidia, which has been volatile as of late, still up about 180% this year, but we have earnings coming up in mid-February. It still seems like a far ways away, but you know, investors start preparing now for such a big name.
Yeah. That's a very good point, because people should realize that Nvidia does not have your December 31 quarter end. So yes, their next quarterly release will be beyond that. But the interesting thing about Nvidia, from my perspective, is people assume that the stock is grossly overpriced because it tripled in 23, working on a triple this year. But their earnings have grown even faster than that. So you have a stock that's trading around 30 times earnings, probably grow earnings this year another 50%. I don't know what they'll do in the out years, but I still think it's going to be pretty strong growth. And so Nvidia, not today, not tomorrow, but any dip, and it always comes, is probably a better buy, I would say, on a PEG ratio basis, PE to growth. It's reasonable. It's not expensive at all.
Stocks with above-average financial growth are the focus of growth investors, since they attract the market's attention and provide strong returns. However, it might be difficult to identify a growth stock that can fulfill its full potential. These equities are inherently riskier than average, in addition to their volatility. Additionally, a stock whose development narrative is actually over or nearing its end may cause one to lose money. Finding cutting-edge growth stocks is made relatively simple by the Growth Style Score, which examines a company's true growth possibilities in addition to its conventional growth features. Currently, our proprietary methodology suggests Nvidia as one such stock. The business has a high rank in addition to a positive growth score. Stocks with the best growth characteristics routinely outperform the market, according to research. Additionally, returns are significantly better for equities with a growth score of A or B and a rank number 1, strong buy, or 2, buy. The stock of this manufacturer of artificial intelligence and gaming graphics chips is currently a fantastic growth pick due to these 3 key aspects. Since most investors are looking for rising profit levels, it might be argued that nothing is more significant than earnings growth. Double-digit profits growth is very desirable to growth investors, since it is frequently seen as a sign of promising future potential for the business in question. Investors should concentrate on the anticipated rise, even though Nvidia's historical EPS growth rate is 72.8%. This year, the company's EPS is predicted to expand by 126.8%, surpassing the industry average of 34.2%. Any firm depends on cash flow, but growth-oriented businesses are more likely to benefit and value higher than average cash flow growth than are established businesses. This is because these businesses may launch new initiatives without having to raise costly outside funding, because to their substantial cash accumulation. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Well, retail investors also flocked to Nvidia this year. It saw nearly $30 billion in inflows over the course of 2024. That is according to Vonda Research. Now, rounding out the top 3 were SPY, that's pegged to the S&P 500, and Tesla. And this just comes back to how Nvidia has made it into the dinner table conversation, the wealth management conversation, the basketball court conversation. Wherever you are, you've probably heard somebody mention the ticker symbol NVDA and when they got in, perhaps, as well.
Yeah, you're right. This NVIDIA has become a mainstream company. After a year, many people, I would say, still didn't really know what the company does. I would argue a lot of investors still don't know what NVIDIA does. It's a very complicated company moving at a speed not many of its competitors are moving at. Certainly, that includes the folks over at Intel. What also stood out to me with this Vanda data, really 2 things, Brad. Within the top 20, in terms of the retail investors, what they own, JP Morgan and AT&T. Now, we've highlighted AT&T here throughout the year, had a lot of conversations with CEO John John Stankey. One of the hottest performers this year has been AT&T as it's turned itself around. JP Morgan, of course, continuing to do well. And this fun fact, too, I think really speaks to, this other fun fact, really speaks to the retail investing community still very, very engaged in these markets. $265 billion of net new inflows into U.S. markets by the self-directed retail investor this year. That is down about $25 billion or $25 billion less than the past 3-year average. But nonetheless, that's a healthy number. Yeah. A healthy number of retail investors engaged in this market, trying to prove their financial situations and lives, and maybe not necessarily concerned about some of the valuations on these names. Whether they get concerned next year, to be determined.
But this also, it really does talk about a major shift that we've seen in the mind of some retail investors. We've gone from meme stock and the momentum trade to, okay, now we're looking at companies with fundamentals. We're looking at a longer term time horizon and not just trying to hop in on the trade, but be true investors for a longer term period of time. And that's why you get into some of the fund manager surveys, which where's the most overcrowded trade right now?
Mag 7.
Long Mag 7.
Yep.
So that really just gives you a little bit more of the mindset of how the retail investor has shifted in this near term and how that's kind of mirroring what we've seen from a lot of institutions over the course of 2020.
Shout out retail investors. Love you guys.
Love you. All right.
At the moment, Nvidia's cash flow growth is 303.7% year over year, which is more than that of several of its competitors. Actually, the rate is comparable to the 14.3% industry average. Although the current cash flow growth should be the primary consideration for investors, it is also worthwhile to examine the historical rate in order to properly contextualize the present reading. Over the last 3 to 5 years, the company's annualized cash flow growth rate has been 50.2%, which is higher than the 2.2% industry average. Examining the pattern in earnings estimate revisions might further confirm a stock's superiority based on the previously mentioned measures. Naturally, a positive trend is advantageous in this situation. Trends in earnings estimate revisions and short-term stock price changes are strongly correlated, according to empirical studies. Nvidia's earnings projections for the current year have been increasing. Over the past month, the consensus estimate for the current year has increased by 0.4%. Based on several indicators, including the ones mentioned above, Nvidia has achieved a growth score of A, even if the total earnings estimate revisions have placed it as a rank number 2 stock. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts. So hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Okay, so you don't like the quantum computing names, but then what are investors supposed to do? To stick with the magnificent 7 names that continue to run up? And as we look at projections for next year, a lot of these companies are not expected to deliver the same level of profit growth they have in the past.
Well, among the Mag 7, I only like 2. I favor only right now Nvidia and Amazon. I own the other names, but for various reasons, and in some cases it's valuation, I'm not buying them with fresh capital. And so my list, even of the megatrend names, has narrowed. And then there are other ideas as well. But quantum computing is way, 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 way off.
Okay, but
there will
within
always be other opportunities, and some other opportunities will present themselves because we probably will have some volatility when these companies announce their December quarter in the next couple of weeks. Probably the 3rd and 4th week of January will bring opportunities because some good long-term stories will probably disappoint, give us some downside volatility, and then we can snap up some of their shares.
Nvidia recently experienced a jolt, falling as much as 3.4% to over $135 as investors considered a flurry of new information. For a fraction of what Western players pay, a Chinese startup called DeepSeek introduced an AI model developed on Nvidia's H800 GPUs. On the one hand, it's an obvious acknowledgement of Nvidia's technological prowess. Conversely, it fuels new anxieties about regulatory obstacles and export limitations. The market is waiting for more hints about Nvidia's strategy in this high-stakes AI chess war, as CEO Jensen Huang is scheduled to introduce the company's next-generation Rubin processor at CES in January. In the meanwhile, 2025 might not be only Nvidia's year. Despite holding an astounding 90% of the market for AI chips, competitors Positron and Sampanova are preparing to take a piece of the action. Their intended victim. Consider the rapidly expanding field of inference computing as the brainpower that enables AI to respond in real time. Although Nvidia's Blackwell chips are powerful competitors, will it be able to hold onto its advantage in a market where entrepreneurs are vying for the best deal on high-performance, reasonably priced hardware? Even Jensen Huang acknowledges that the market is changing, but he still believes that Nvidia's current supremacy will hold the line. Tensions between the United States and China are exacerbated by the fact that Nvidia is in the sights. China is retaliating with rare mineral bans and antitrust investigations into Nvidia's acquisition of Mellanox, while the U.S. Commerce Department is seeking explanations for how Nvidia's processors continue to reach China in spite of stringent regulations. Nvidia's future may depend on its capacity to manage these geopolitical minefields while maintaining its lead in the AI weapons race. Investors, it's going to be an adventure, so fasten your seatbelt. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.